Hello there, and welcome to the weekly outlook. Okay, so we've had quite a few holidays, obviously, in the past. Um, Coming into next week, the calendar isn't fantastically populated, but we have got a couple of alerts out which are going to be of interest towards the end of the week. Really, sort of Wednesday things start to improve, and then looking through to Friday, we've got the non-farm employment change on the US dollar. Okay, so what can we expect to happen next week, or what are we expecting to happen? Well, if first of all, if we just have a quick recap on New Year's Day, we had manufacturing PMI come out from China, which wasn't as good as expected. So probably what we will probably see when the market opens is we may see a bit of a downtick in the Aussie dollar. And any other commodity-linked currencies, possibly New Zealand. Oh, sorry, export-linked currencies to China. Aussie will be the main one being affected. So I am looking for the Aussie dollar to continue down. It did rebound off of this level here at the 7320 level, and now kind of looking for a bit of a push down and a retest of the 72 area. That's going to be my take profit target on this sell trade at the moment. So we're looking for this sort of price action. I'd expect it to open with a bit of a gap in the market. It may even open with a new low or below the S1 level. And we're possibly going to target this 7.2 area here. I think the downside is going to be limited on the Aussie. Things are starting to improve in Australia. I think really it's the commodity linked stuff regard that's going to cause downside as per my written analysis. So that's going to be the first trade to look at this week. Okay, the next thing we're going to be looking at on the calendar is going straight through. Monday we've got the pound manufacturing PMIs in the UK. Now we do need to start to see an improvement in these heading into this year, because this is the real reason why the pound is failing to recover or sustain any rally. These manufacturing services and construction PMI figures are really having a bit of a negative effect on the pound at the moment, and the low inflation is pushing back rate hikes, which is also weighing on the pound as well. Now I do expect the pound US dollar to find a floor around about this 144 level. I think it'll be hard to break. Certainly the 1.4 level will be hard to break to the downside. Once we get there, then I'll be looking to rebuy the pound unless we start to get better data coming out from manufacturing, construction and services quite regularly over the next coming days. So, but at the moment, I am still looking to sell this off, and at the moment we reached that S3 level on New Year's Eve, and I would like to see a bit of a pullback to this previous target of mine, which is 148. See if we can see that held as support, and then possibly look to resell that from that position, and look to target that 144 area, the 144. Okay, with stop losses above this sort of zone here, so we get in. We've got a good chance of a 3-to-1 trade there. Which should be a good opportunity. I just changed that to green, so you can see that's looking at a long candle, and then we're looking for the sell-off there. Okay, so whether the manufacturing PMI instigates that will remain to be seen. Obviously, if it comes in weaker than expected, then it will cause the pound to sell off. If it comes in slightly better, then obviously we need to see a stream of good data. So if it coming in slightly better just once will probably cause us to have this little bit of a pullback. But again, it's just going to be an opportunity for us to resell. ISM manufacturing PMI on the US dollar at 3 o'clock is expected to come in slightly better than previous, but still showing contraction because it's below 50. If we get a reading above 50, then that's going to be a positive sign for the US dollar, and again, that could help bring the pound further down as well. Also, we're looking for that sort of information with regards to other currency pairs as well, such as things like the euro. We need to see that stronger US dollar data coming through in order to help instigate those downside trades. But the euro at the moment is starting to pull away from its highs. We are looking, you can see the analysis I've got here, we are looking for a pullback down to the 105 area, so quite a big sell-off looking to come. Hopefully that's going to come this week. The big hurdle we need to get through is the 108 level. That's causing us problems at the moment. Once we see that broken, then it should clear the way all the way down to 105. And a return back to that price. Looking at the calendar, euro data is fairly light, but again, coming in towards the end of the week where we start looking at the ADP non-farm payrolls and the non-farm payrolls, then that's really going to give us hopefully the indication or the push to get down there. Unemployment rate on the US is expected to stay steady. The non-farm payroll employment change is expected to drop slightly, but as long as it stays above 200, then it's going to be positive for the US dollar. So that'll be heading into the long. So we really want to get into those trades before we head into that non-farm payroll, so that we can get those entry levels locked in and trade it a little bit safer towards the end. Now the other one that I'm interested in is the on Friday is the Canadian data as well, which will be coming out amongst the non-farm payroll data. It is expected to come in. Employment change is expected to be slightly better, and unemployment rate is expected to hold the same at 7.1%. Now we have been looking for a technical sell on this US dollar CAD. In fact, we sold it back here at 138.90 last week. And then resold it again around about the 139. What we're looking for really is a pullback on the sentiment just to this 50% level here on the Fibonacci. Now if I put that on a daily chart and tighten it up a little bit, you'll see where it is that I'm going here. Okay, so you can see, let's let the chart catch up. Okay, so you can see I've got the Fibonacci tool on here running from where this rally began up to here, and what we're expecting to see is a 50% pullback on this rally, and then for it to rebuy. So we are selling it at the moment, and I'll continue to sell it down to the 50% level. Now the non-farm payroll is going to make a difference. Normally the non-farm employment change in the US dollar data takes precedence over the Canadian data that comes out. So if the non-farm payroll comes in better, then we'd expect to see a rally. But I think on the lead up to it, we're probably going to see this 50% level tested to the downside on the Canadian data, with the expectation of the employment change to be slightly better, and then we'll be looking to rebuy from the 50% level there as well. Okay, and then that's pretty well much it for the week. Just have a quick scan through the Aussie dollar. Obviously, we've got retail sales out on Friday morning as well. That's expected to be slightly poor. Now, directly after Christmas, if that is poor, then it's quite a bad sign really, and that could also cause weakness in the Aussie. So we are looking for downside in the Aussie next week overall. We've got building approvals as well, expected to come in slightly weaker. We are looking at the Aussie dollar being weighed on next week as well. So it should be a good trading week. We've got some good announcements coming up, and we've got some good opportunities starting to present themselves. So trade safe, and hope you make some pips.